Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a phenomenal weekend, was able to get out, enjoy a little sunshine. I see that in the U.S., at least, there is a tremendous heat wave as I'm here in beautiful Houston, Texas, but there are other people that are even hotter than me all the way up north to Boston. So hopefully you're staying cool, enjoying the heat, wearing your masks and all that fun stuff. But we're going to do what we do each and every day, looking at our 10 to 12 futures markets from an educational perspective, looking for both breakouts and reversals. Now, I will say this. We're coming up on earnings season, and a pretty important earnings season at that, in that we're seeing our bullish momentum in our markets are slowing just a little bit as we're heading into this next earnings season, which I think could be very important because if that momentum starts to turn, let's just be aware. I will say this, there's not a whole lot to trade today. Matter of fact, we're going to go through this really quickly because there's not a whole lot of changes from our lines from Friday, because Friday the market just kind of sat sideways, which is why we gave the idea on Friday of the SPX one-day options trade. Hopefully some of you were able to take advantage of that opportunity. Those are the days that we look for. We may find another one today, as those one-day options trades, Monday, Wednesday, and Fridays, are actually pretty good ideas for those of you that trade options. If you don't trade options, why not? You really should learn. It's a great asset class to understand more of. What's funny is even at Traders Army, some of our members, they come in as futures traders and they stay with us for futures, but then they don't really get into the options as much. Options give you so many more opportunities, and I know we don't cover that in the daily market commentary, but I would implore you to look into options. We have a ton of options content at Traders Army. Feel free to go and explore and take a look. So, all right, let's go ahead and dive in. So this morning on our S&P, we're down about 6 points. And we are very much entrenched in a sideways kind of price action. And so what I have really identified in here is a potential area for a breakout with an alert set. And remember, we set alerts so that we don't have to sit in front of our computer all day. We do have a potential for a breakdown below this 3190 area. It would require some basing inside of this zone. We bounced off of it in the overnight, and so that would require some basing inside of this zone. If that happens and we do break through there, there's a little 15-minute level down there for a potential reversal at this wick over wick right in here. So that's the S&P levels for today. Not a whole lot to really add. The Nasdaq, kind of a similar picture. A potential breakout above this 10.7 area, provided that we get quality basing. We have not really seen a whole lot of that since last night's market movement. And so waiting on that. And then also a breakdown potential below here, this 10.466. I think the better level is this demand area for a reversal right in here if we get a pullback into that region. So just keep an eye on that one for today. But both of those potential breakouts, remember, basing is important in all of those. In the Russell, same thing. Picture, we're still in between our areas of supply and demand. I still have two alerts. The same alerts that we set on Friday are still here to tell me, if we get basing here or if we get basing here, it would cancel this trade and it would make this one actually more viable. So I will, for those of you that are Traders Army members, I will send you out a copy of these charts. They will be in the trade updates as soon as I'm done recording here. Let's move over to commodities. So in our commodities trades, we have crude oil. So in crude, we are sitting above a potential level in here. This is a 15-minute level. It's pretty wide, though, and we continue to base in front of that level. So I'm a little bit less comfortable with it than I was last night, just because we continue to base in front of the area. We had this little level last night. Price came close to it in the overnight, didn't really enter it. And even our European market open, we've come back to that area, gotten a little bit of a bounce off of it, but not a whole lot to really lean on. And so nothing to really look at for today. I mean, we did look at a potential for an iron condor in crude oil and then also in gold. We found a really nice one in gold yesterday, and the gold iron condor, I think, was a 5-day expiration, looking to stay between $18.50 and $17.80, and it was paying over $1 I think it was $1.20 a contract, if I recall correctly, as of last night. So, still take a look at that one if you were interested in an iron condor setup. That's a really viable options play in there. Other than that, we have a demand zone right down in here, the 1798 by 1800 whole round number level there, where we have above a rally-based rally above a pivot low as an opportunity. Last night we talked about nat gas as a potential gap and go. We never got below the entry. Doesn't mean that the trade is dead, by the way. We're just still holding off on it. It's not gotten there yet. Copper sitting above its breakout. And then soy, I will say last night in soy, I did feel like this level here was a pretty good level because my gut, everything it told me, the basing in front of the level was really the thing that turned me off of that zone. But I liked the fact that we had a good, strong move away, a base drop below a pivot high. Prices now come into the level. 1, 2, 3, 4, 5, 6 candles later, we're at break even. So that trade now is dead, unfortunately. Have to let it go because the next leg would make sense that it would pop up, right? These are oftentimes what turn into really good breakout trades. So I'm okay being wrong and that's why we have the 6 candle rule in place. Corn, we're still in between our areas of supply and demand. And I know I don't normally go through those in the daily market commentary, but those are some of them we cover in the live trade room, so I at least wanted to touch on them. Looking at our bonds and currency markets overall, so starting with the ZN, there's still nothing clear until this demand area well below me. In the overnight, we gave a pretty strong move away here, but no real supply to lean on there. The Aussie, no real change in this market either, as we are still very sideways. And that's very evident. You can see that on our 4-hour time period. The euro, in our euro level. Now, our euro level, we did get back. Oops, wrong button there. In our euro level, we did last night come into our demand area and got a very nice move away. So in that euro trade, the first target was achieved right away. The second target, we are looking at this 1.15. So hopefully you're able to catch that for a little run last night in the overnight, as it's still continuing to move just a bit. If you are still in that, take your stop and move it up to below 1.14531 so that you've locked in a pretty nice little profit on that one. I now need to take this level and remove it since we've traded to it already. And so my stop is locked into this area right here. Canadian dollar. Inside the Canadian dollar, we did get a little touch below this level. Unfortunately, it didn't really hang around. 1, 2, 3, 4, 5, 6 candles later, you had an opportunity to get out at basically break even. If you took it, it just was unfortunately that it didn't flow all the way. We're now rallying back up to an area of potential supply right up in here where we have a drop base, pretty nice drop. So keep an eye on that zone for a potential breakdown from that level. Or excuse me, reversal in that level, not a breakdown. And then the Great British Pound, I called it last night the Great British Boar because it's just boring. There's just not a whole lot going on, just chopping sideways. We still have to break out above here or down below there, and then I've got some demand below me and some supply above me. But we're in between quality areas in that market. And then the Japanese yen, we had a potential breakdown right below this blue line, but unfortunately we got no basing, and it just, boom, rocketed straight up from that area. Now we have returned back to what could be a decent reversal, which actually was found on a 15-minute. It's this, this basing in here, which was the origin of that strong move away. Unfortunately, because of this right here, this means that we do not get a 2-to-1 reward to risk on this trade, right? Because this would be my opposing zone. And so I think that if you're not in this one, don't get in it now. Matter of fact, I don't really like this level because of this zone right here. I think that's going to be the kiss of death before a level is basing before the zone. So as always, if you have any questions, please send us an email, support@tradersarmy.com. Don't allow yourself to force trades today. Today's one of those days where you could easily force a trade and it doesn't make any sense to do so. Wait for levels to come into your zones. Thanks so much, everybody. Hope you have a great day. See you soon.